Hey everyone, there are 4 key trends in play right now that every commercial real estate investor should be monitoring. The first is inflation. Even before the Middle East conflict started on February 28th, we were already seeing upward pressure on inflation. Presumably, that was largely driven by tariffs and immigration policy. But the conflict in the Middle East will likely amplify the pressure. Now, there are a lot of ways to measure inflation. The one we see most often is the Consumer Price Index, or CPI. And that metric has been the most tame over the last few months, coming in at just 2.4% in February. CPI inflation remains relatively low in part because it's heavily weighted on housing inflation. Housing inflation has been cooling over the last year, and that trend is likely to continue as the backward-looking metric increasingly reflects the nearly flat home price trends and rent growth of the last year. Another inflation metric, the Producer Price Index, or PPI, reflects the cost of inputs into manufacturing and other businesses. And through February, PPI was trending upward, coming in at 3.4%. The Producer Price Index can be a leading indicator of the other inflation metrics, so it's something investors should continue to monitor. And the third inflation measurement is Personal Consumption Expenditures, or PCE, which is the metric the Federal Reserve watches most closely. In January, which is the most current reading, PCE inflation came in at 2.8%. Now, all of these readings are from before the Middle East conflict, before oil prices skyrocketed. And it's broadly believed that the rising energy costs will put upward pressure on inflation in the coming months. And that brings me to the second factor investors need to consider, which is what the Federal Reserve will do. Now, last week the Fed held rates flat, and Wall Street investment trends suggest that future rate cuts have become increasingly unlikely. The probability of a rate cut in June has dropped below 10%. And even a rate cut by the end of the year has become questionable. A lot will depend on how long the conflict in the Middle East lasts and how much inflationary pressure it generates. With the price of oil in the $100 per barrel range and gasoline prices up by 30% or more in the last month, the inflationary impact on the economy could be substantial. The third trend to watch is what happens with Treasury rates. Since February 27th, the 5-year Treasury increased by about 35 basis points, and the 10-year Treasury is up about 30 basis points. That reflects the belief that the Fed won't reduce rates as much as people had thought earlier this year. The good news is that despite the recent bump, the 10-year rates still appear range-bound in the 4 to 4.5% range. And that takes me to the fourth thing investors should monitor: what the lenders do. The big question going forward will be whether lenders start to widen their spreads to mitigate rate risk. So far, lenders have held their spreads pretty tight, and the availability of lending capital remains plentiful. As a result, rates on most property types have been running in the low to mid 6% range, with agency financing on multifamily properties in the low 5% range. Of course, the rates on specific assets will vary depending on things like the asset type, its location and quality, the borrower's strength, and so on. So there are a lot of variables in play right now, and investors need to be tuned in to short-term risk and volatility. But these forces should not overshadow the opportunities offered by commercial real estate. While the sector absolutely faces risks and headwinds, investors need to consider the broader investment landscape. The stock market volatility index remains elevated, and many believe stocks are richly valued right now. And at the same time, real estate values recalibrated over the last 4 years, reducing prices and bolstering yields. And if inflation remains persistent and elevated, commercial real estate offers some inflation resistance. So, in the increasingly choppy economic outlook over the short term, commercial real estate continues to offer a durable and comparatively stable outlook that should hold particular appeal for investors who keep their eyes on the horizon.